Thank you, Dr. Liu, for being here with us today and answering some questions very briefly. How well advised was Angela Merkel to travel to China and ask for help in the euro crisis? What is your opinion?
Well, I think it is well advised. The purpose of the visit, of course, is not just simply say China help to resolve the debt crisis in Europe. Importantly is to convince the government of China and Chinese people that Europe have the will to put the debt crisis at the bay and eventually to resolve it and to develop a growth strategy underpinned by the fiscal union. Because Chinese reserve has been invested largely in European bonds beside the US Treasury. So it is important at least for the Chinese to continue to invest by at least not selling the European bonds. So that is a very critical element to have a dialogue with the government. So I think it is timely.
What role does China want to play in saving the euro?
Well, Eurozone debt crisis has a global effect, has actually quite a large devastating systemic risk through the banking system. We all experienced in 2008 when the US faced the financial crisis. The meltdown of the credit system created a freeze of trade financing. Europe is our largest trading partner. If the European banking system really have a systemic risk, it could create another round of trade financing difficulty, which just from that channel could affect us. Of course, beyond, there are other repercussions as well.
What economic effect does the euro crisis have in China?
Well, so far, a lot of volatilities in the market, the fear and the fatigue and everything. But looking at the medium term, the issue of this massive, unprecedented monetary easing or support. Like in the US, it was a quantitative easing. In Europe now, this long-term refinancing operations. Plus, Japan and UK and other countries are massively injecting liquidity to help banks and the economy. What is the consequence to emerging market? We're already seeing rising oil prices, commodity prices, but there is also a potential eventually very high inflation. Otherwise, if the countries injecting liquidity want to reverse their policy, what would be the market reaction? It's still unknown because this is really uncharted water.
Thank you very much.